In today's show, Bitcoin witnesses its first 6-week losing streak since 2014. I'll be sharing with you the 5 things to watch out for in the Bitcoin market this week. And as shared here by blockchain backer, Bitcoin closes the week below the 100-week moving average. Both previous times led to capitulation to 200-week moving average in 2014 and 2018. Today's chart has many differences from those two times, and those two times were very similar to each other. And as shared here by material indicators, historically, 69.5 million in Bitcoin bid liquidity would serve as support, but historically, it also had a significant amount of liquidity below it. That does not seem to be the case here. Don't try to catch this knife. And as Dan Crypto Trade shares here, the best scenario for a bottom for me would be capitulation somewhere in the next few days, followed by a lower than expected CPI print on Wednesday. That would be my cue to bet big. Now check this out. 7.7 million Bitcoin are currently sitting in loss. This is the highest amount since April 15th. 2020, that's almost 41% of the total circulating supply. And Plan B updates us here, Bitcoin monthly RSI below 50 and 50% below the all-time high. And as Plan C shares, the bears calling for $20,000 Bitcoin is the equivalent call for when the bulls were calling for $300,000 Bitcoin. And as shared here by on-chain analyst Dylan LeClaire, a Bitcoin dip down to its realized price, which is the average on-chain cost basis, is entirely possible and has been consistent with previous market bottoms and bear market cycles. Realized price is $24,300 at the moment. Also in today's show, the Luna Foundation guard to deploy $1.5 billion to bolster UST peg and build the Bitcoin reserves. As they share here on Crypto Twitter, as a result, the Luna Foundation Guard Council has voted to execute the following: loan $750 million worth of Bitcoin to over-the-counter trading firms to help protect the UST peg, and loan $750 million UST to accumulate Bitcoin as market conditions normalize. Also in today's show, analysts who predicted the May 2021 Bitcoin collapse maps a potential Bitcoin capitulation scenario. Quoting Dave the Wave here, if we get a Bitcoin move down comparable to the previous two, looking at the $25,000 region. Also in today's show, here's the most realistic Bitcoin price prediction for the rest of 2022, according to top crypto strategist Kevin Svensson, who shares here, Bitcoin closed April monthly candle below the 20-month exponential moving average for the first time since the bull market started. What does this mean? I'll be breaking this down for you. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. The goal is to get to 100,000 subs, along with a $100,000 Bitcoin price. And if you like getting that crypto, be sure to smash that subscribe button, that's right, and ring that bell to turn on all notifications to receive daily premium Crypto News Alerts every single day, just like this. And today's episode is brought to you by BlockFi, the leading provider of financial products and services for crypto investors. Did you know they have 1 million plus clients and work with over 350 global institutions and have over $10 billion in assets? That's right, quoting them from TechCrunch, cashback is out, Bitcoin is in with the new BlockFi credit card. Quoting them from Forbes, BlockFi named to Forbes 2021 FinTech 50 list. And quoting Yahoo Finance, BlockFi crypto credit card holders are getting a better deal than expected thanks to rising Bitcoin price. Now check this out. They have paid out over $15 million in crypto rewards thanks to their BlockFi Bitcoin Rewards Visa credit card. And you can actually see if you are approved without any impact to your credit score whatsoever. To take advantage of this, go ahead and use my referral link in the description right down below. And did you also know you can get up to a $250 Bitcoin bonus when you buy crypto or fund your account today with BlockFi? So go ahead and take advantage of this, and let's start stacking those sats, shall we? All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. How's it going, crypto fam? Make some noise in the live chat. Now, we got a lot to cover, so let's dive right in for the 5 things to watch out for in the Bitcoin market this week. 6 weekly closes in the red. That's right, whichever way you may dice it, there is little to be bullish about when it comes to Bitcoin price charts this week. The weekly close on May 8th at 34,000 meant that Bitcoin delivered its 6th weekly red candle in a row. That's right, that chart feature has not been seen in nearly 8 years. The last occurrence began in August of 2014. Data from Cointelegraph Markets Pro and TradingView shows then, as now, Bitcoin was in its second year of its 4-year halving cycle, having seen its first blow off top at just over $1,000 in November of 2013. Now this cycle, however, has been different, as that blow off top either did not arrive or was a lot more muted than the previous cycles. And right here, looking at the Bitcoin 1-week candle chart. Now meanwhile, overall macro conditions have taken care of any hope of a late surge among the majority of analysts who now expect financial tightening by central banks worldwide to keep risk assets such as crypto firmly in check. Now back to the chart, Bitcoin has lost over $4,000 or 11% in May already. Now historically, the worst month of May on record was, in fact, last year, in which the pair Bitcoin/USD lost 35.3%. Data from on-chain monitoring resource CoinGlass shows. Now, after April's performance, however, the odds of a comeback feel slim. For 4 years in a row prior to 2022, Bitcoin conversely saw gains of at least 32% in April, but this year printed a 17% loss, its worst on record. Now, for the second thing to watch out for in the Bitcoin market this week, Bitcoin 100-week moving average falls. That's right. As such, the advice from analysts when it comes to short-term Bitcoin price action is practically unanimous as the week begins. Be careful. After the weekly close, Bitcoin continued dropping towards 30,000 at the time of this recording, looking to test 33,000 in January's lows of $32,800 next. And as material indicator shares here, don't try to catch this knife. Now, the order book for May 8th shows a major bid wall in place at 33,000 was put there as another wall of buy interest at around 33,800 was dealt with swiftly by the market, showing the veracity of sell-side pressure in the current environment. And quoting material indicators here, historically, 69.5 million in Bitcoin bid liquidity would serve as support, but historically, it also had a significant amount of liquidity below it. That does not seem to be the case here. Now, last week's weekly candle also saw Bitcoin dive below its 100-week moving average for the first time since March 2020. As blockchain backer shares here, Bitcoin closes the week below the 100-week moving average. Both previous times led to capitulation to 200-week moving average in 2014 and 2018. Today's chart has many differences from those two times, and those two times were very similar to each other. Now, for the third factor to keep your eyes out on this week in the Bitcoin market, US CPI primed to continue inflation narrative. That's right, Bitcoin's rundown in the first week of May was overwhelmingly thanks to the broader macro weakness now firmly in place across the global markets. Stocks are particularly problematic in this respect, as crypto's ongoing correlation in those indexes makes for a grim ride for investors. And as shared here by Carl Quintanilla, we expect inflation to peak this summer between 6 to 7% and to recede to 3 to 4% next year. With no recession, we may have spotted the first signs of peaking inflation already. And as shared here by Dan Crypto Trades, the best scenario for a bottom for me would be capitulation somewhere in the next few days, followed by a lower than expected CPI print on Wednesday. That would be my cue to bet big. Now, for the fourth factor to keep your eyes out on this week in the Bitcoin market, calculating capitulation. That's right, a mass sell-off as investors panic sell their Bitcoin. Data shows that the temptation to initiate may be strong. Currently, over 40% of the Bitcoin supply is being held at a loss, and this is the highest proportion since April of 2020 after the COVID crash. As pointed out here by the On-Chain College, 7.7 million Bitcoin are currently sitting in loss. This is the highest amount since April 15th, 2020. That's almost 41% of the total circulating supply. Now, for the fifth and final factor to keep your eyes out on this week in the Bitcoin market, sentiment collapses to macro bottom zone. It is no surprise that overall crypto market sentiment has not benefited from the events thus far in May. According to the Crypto Greed and Fear Index, it is only this week that the reality of the situation has hit home for the majority. Checking out the Crypto Greed and Fear Index here, we're currently rated an 11 out of 100 in extreme fear, the lowest we have been in a very long time. Yesterday was an 18, last week a 28, and last month a 30 in fear. Quoting sentiment here, with Bitcoin now having retraced all the way down to 33,900, trader sentiment has fallen to 6-week lows. We typically prefer to see capitulation signs like this, as weak hands leaving the space is generally what is needed for a truly notable bounce. And as Plan B updates us here, Bitcoin monthly RSI below 50 and 50% below all-time high, which you can see here in the green. And Plan C updates us, the bears calling for $20,000 Bitcoin is the equivalent call of when the bulls were calling for $300,000 Bitcoin. Let me know if you agree or disagree with Plan C. And as on-chain analyst Dylan LeClaire shares here, a Bitcoin dip down to its realized price, average on-chain cost basis, is entirely possible and has been consistent with previous market bottoms and bear market cycles. Realized price is $24,300 at the moment. Here's a standardized ratio between market price and realized price, which is the market value to realized value. 24,000 would be in the green zone. Again, dips to/below realized price have historically signaled a capitulation style bear market bottom is in or close. And he leaves us with this. Going back to December, I outlined this possibility and prefaced it with the opinion that it is unlikely to occur unless a significant liquidity crisis emerged in legacy markets. Well, it looks like we are getting one. Stay safe out there. So there you have it. And before I break down next story of the day, the Luna Foundation guard to deploy $1.5 billion to bolster UST peg and build the Bitcoin reserves. But first, let's take a quick look at the overall crypto market. As you can see, all the major cryptos are currently correcting and in the red. Bitcoin down 5% for the day and in the blood red, trading just above $32,800. We have Ether down 6.3%, trading just under $2,400, while Solana, Avalanche, Binance Coin, Polkadot, Luna, and XRP all correcting and in the red. But all right, now let's break down our next story of the day. Amid the sharp pullback across Bitcoin and the wider crypto markets this week, the Luna Foundation guard is set to deploy $1.5 billion worth of capital to help protect Terra's UST peg to the United States dollar. The Singapore-based nonprofit Luna Foundation Guard is a part of Terra's ecosystem and is tasked with collateralizing the network's algorithmic stablecoin UST to keep its USD peg intact, while also managing the network's reserves. And while details are sparse at this stage, the Luna Foundation Guard outlined on Twitter earlier today that its first loan out will be $750 million worth of Bitcoin to over-the-counter trading firms to manage and trade the capital. And following on this, once the market has stabilized, the Luna Foundation Guard will obtain $750 million UST loan, most likely from Terraform Labs, to rebalance its reserves. Now, the Luna Foundation Guard noted that the council voted to execute the plan after observing significant market volatility across Bitcoin, UST, and Terra/Luna over the past several days. As they announced here on crypto Twitter, number one, over the past several days, market volatility across crypto assets has been significant. The market turmoil is also reflected by the past week's uncertain macro conditions across legacy asset classes, and they go on and on. I'm going to fast forward to number 4. As a result, the Luna Foundation Guard has voted to execute the following. Number 1, loan $750 million worth of Bitcoin to over-the-counter trading firms to help protect the UST peg. And number 2, loan $750 million UST to accumulate Bitcoin as market conditions normalized. And their co-founder Do Kwon confirmed this with his tweet. The Luna Foundation Guard Council just voted to deploy $1.5 billion in capital to allay market concerns around UST. Now, as the Luna Foundation Guard's $2.91 billion reserves are primarily backed by Bitcoin by 91%, or $2.7 billion at the time of this recording, the declining price of the asset is forcing the entity to readjust its balance sheet to maintain UST's peg. And at the time of this recording, Bitcoin is down about 12% over the past 7 days and sits roughly at $33,600, while UST is slightly off its peg at 99 cents. Now, Terra's native asset Luna, which also plays a part in maintaining UST's peg via its burning and minting mechanism, has suffered significantly over the past week, as well as dropping a hefty 24.5% to sit at $62.15. And before I break down next story of the day, analysts who predicted the May 2021 Bitcoin collapse matched potential Bitcoin capitulation scenario. But first, let's take a quick look at the overall crypto market cap, sitting under $1.5 trillion with $109 billion in volume in the past 24 hours. The current Bitcoin dominance is 41.8%, with the Ether dominance at 19.2%. And checking out the top 100 cryptocurrency gainers in the past 24 hours, you can see Waves leading the pack, up 4%, trading at $13.78, followed by Near Protocol, up 2.6%, trading at $10.86, followed by Eunice Said Leo, up 1%, trading at $5.42. And now checking out the top 100 cryptocurrency gainers in the past week, you can just see a sea of red with just a handful in the green, including Waves up 13.8%, Algorand up 11.9%, and Tron up about 10%. But all right, now let's break down our next story of the day. An analyst who called the Bitcoin May 2021 collapse is laying out possible scenarios for the King crypto, including a dramatic capitulation event. The pseudonymous analyst, known as Dave the Wave, tells his 98,000 Twitter followers that Bitcoin is likely heading down to below $25,000 range. For references, he uses the May 2021 and November 2021 corrective periods as examples of what Bitcoin traders could see next, as he shares here on crypto Twitter, if we get a Bitcoin move down comparable to the previous two, looking at the $25,000 region. And he recently shared this face with us because it looks like a possible scenario which we're witnessing right now. Now, the analyst also points out that despite the bearish price action in recent weeks, Bitcoin still has considerable downside as suggested by its 200-week moving average. Dave the Wave says that Bitcoin is still well above its 200-week moving average and that its 20-week moving average historically tends to revisit the 200-week moving average before a bear market is over, as he shares here. One for the bullish bears and for the bearish bulls. Note that the 200-week moving average is quite high above the previous peak, while the 20-week moving average is moving down toward it. Now, while the analyst says that an extended downtrend is the most likely scenario for the King Crypto, he notes that zooming out, Bitcoin is still in a powerful long-term uptrend. As he shares here, a few of the more optimistic theories may have become casualties as the price of Bitcoin continues to unfold in the market, but the macro bull remains, not to mention the LGC, which is the logarithmic growth channel. Let me know if you agree or disagree with this crypto analyst. And before I break down our final story of the day, here's the most realistic Bitcoin price prediction for the rest of 2022, according to top crypto strategists. But first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 1,200 plus videos right here on my YouTube channel. Also, some very helpful resources for you to plug into, including my crypto merch store live at merch.cryptonewsalerts.net. Also, be sure to smash that subscribe button and ring that bell to turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And of course, you can follow me on all the major podcasting platforms, from Spotify, home of the Joe Rogan Experience, to Apple's iTunes, to Google Play. And if you're listening to the pod, be sure to check out the YouTube channel at cryptonewsalerts.net for the full premium experience with video. And of course, you can follow me on crypto Twitter, Facebook, Telegram, and TikTok. So wherever you're at, be sure to plug in and follow me there. But all right, now let's break down our final story of the day. A closely followed crypto trader is unveiling what he believes is the most realistic price path for the King Crypto for the rest of the year. In a new strategy session, trader Kevin Svensson tells his 105,000 Twitter followers that he's keeping an eye on the 20-month exponential moving average, which he says has been a key in signaling reversals in the long-term trend for Bitcoin. As he shares here, when the price of an asset is on an uptrend and then it catches up with the long-term moving averages, usually that's a sign that the trend is dying down, the momentum is lost. If you cross below them, that is a bearish signal. Now, Svensson highlights that the 20-month EMA was a reliable indicator of major trend shifts during the 2014 and 2018 bear markets. As he shares here, that happened over here in 2014. If we go over here in 2018, we had a major run-up. Trends start to go sideways after the run-up, and then we meet the long-term moving averages. We close below that. It's a bear market. According to the crypto trader, Bitcoin just closed below the 20-month EMA, which he says does not bode well for the Bitcoin bulls. As he shares here, we just had our first monthly close 7 days ago below the 20-month exponential moving average. That does indicate that we had a nice run up. The trend started to go sideways and we caught up with the long-term moving averages. We actually closed below it at the end of April. When you catch up to the long-term moving averages, we're likely going to see some kind of downtrend for at least 4 to 2 months. I would just say up to a half a year, anywhere from 2 months to a half a year of downside, sideways action at lower levels before running up into the next halving. So there you have it. Let me know if you agree or disagree with crypto analyst Kevin Svensson that we're likely to see 2 to 6 more months of bearish price action before igniting the next bull run to new all-time highs. And now for a quick recap of what I covered with you here in today's show. I shared with you the 5 things to watch out for in the Bitcoin market this week, as well as the Luna Foundation Guard to deploy $1.5 billion to bolster their UST peg and build Bitcoin reserves, as well as analysts who predicted the May 2021 Bitcoin collapse maps potential Bitcoin capitulation scenario, and I also shared with you the most realistic Bitcoin price prediction for the rest of this year, according to top crypto strategists. But where do you feel the Bitcoin price is likely to go next? Let me know in the comments right down below. Now for the top 3 comments from yesterday's episode, Chris Minka wrote, about 20% or 4 million Bitcoin has been lost forever. That lost Bitcoin has added value to the network and means that the price of Bitcoin can never go to zero. Amen, fam. Preach. Bitcoin supply shock in full effect. Let's freaking go. And our next featured comment comes from eCoin. Aloha JV, solid show. Another red candle in the weekly close, but not even tripping. Hodl, and if it gets low enough, scooperellas. You got it, fam. Scooperellas. Keep stacking them sats. Now for our third and final featured comment comes from Nico K. Crap, I forgot to join you live today, JV. Please don't forget my B-Day tomorrow on the 9th of May. Thanks for all you do, bro. Nico, happy birthday, fam. God bless. Wishing you the very best. And to be featured on tomorrow's episode, drop me a comment right down below.